This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, May 26, 2016. Euro dollar. So the euro is finding a little bit of support in recent trade, though overall, since the market has stalled out by a 2016 high at 116.17 and ahead of that key medium-term resistance at 117.10, the pressure is back on the downside, especially after breaking back below 112. At this point, any rallies are viewed as corrective, with the market ultimately expected to be well capped ahead of 114 in favor of additional weakness down towards next key psychological barriers at 110 and possibly back towards that low that we saw going all the way back to March at 108.23. At this point, again, any rally should be very well capped ahead of 114. Sterling dollar. So cable has been very well bid in recent trade, with the market rallying all the way back up above some key previous resistance at 46.70 and now approaching that key high from earlier in May, which came in at 147.70. A break above 147.70 would expose the 2016 high just over 148 and also suggest the possibility of the formation of a more meaningful longer-term base. At the same time, inability to establish above 147.70 will keep the overall pressure on the downside, opening the door for renewed pressure back towards next key support at 143.33. Dollar yen. So dollar yen remains confined to a broader downtrend, with the market now looking like it wants to carve out a lower top ahead of the next major downside extension and bearish continuation through those recent multi-month lows at 105.55. At this point, only back above 111.89, that previous lower top, would negate this outlook. Euro Swiss. So Euro Swiss has pulled back from recent highs at 11.30, though ultimately here the market remains constructive and setbacks are viewed as corrective ahead of what should be a higher low and next upside extension beyond 11.30 and towards that 112 yearly and multi-month high further up. Really only a break back below 109.55 would delay this outlook. Aussie dollar. So Aussie has done a good job of being supported after breaking down below the 200-day moving average, with the market now potentially seen exposed down towards next key support at 70, that psychological barrier, which guards against the 2016 low at 68.27. But again, for now, the market looks to be unwinding some maybe oversold studies and is in the process of consolidating or correcting ahead of what should be the next downside extension. Look for any rallies to now be well capped by previous support turn resistance at 74.15. Dollar CAD. So dollar CAD has come under some mild pressure after recently rallying up to just shy of 132 at 131.89. But overall, the market is showing signs of basing out, and ultimately, while the market holds above that previous higher low at 127.72, the risk is for a next higher low ahead of the next upside extension beyond 31.89 and eventually towards 135 further up. Again, only back below 127.72 would negate this basing outlook for dollar CAD. Kiwi dollar. So Kiwi continues to trade lower after the market stalled out several days back by the 2016 high at 70.54. At this point, there's risk for a deeper drop towards next key support at 65.46, that low going back to the 16th of February, which guards against the 2016 low from the 20th of January at 63.47. And the rallies in this market should be very well capped now ahead of 69. SPX 500. So the S&P 500 is threatening this toppish outlook, though while the market holds below 2100 or 2112, that 2016 peak, there is risk for another topside failure ahead of the next downside extension, which will be confirmed on a breakback below 2021. That's critical support going back to that low that we saw on the 24th of March. Again, despite this latest corrective price action or this latest rally in the market out from that 2020 area, while the market holds below 2112, there is risk for another topside failure in favor of a downside extension and potential major top. Look for a break back below the low that we saw on Wednesday, which came in around 2076, to strengthen this outlook and accelerate declines. Only back above 2112 negates this immediate bearish outlook or toppish outlook for the S&P 500. Gold. So gold has been supported into dips in recent trade, although we have seen some sharp setbacks after the market stalled out above 1300 and just shy of the 2015 peak at 1307. But ultimately, the medium-term structure continues to favor and suggest additional upside as the market has broken back above some key previous resistance in the 1190 area and should be supported ahead of 1200 in favor of the next upside extension back towards and above that 2015 peak at 1307, opening the door for a move towards 1400 further up.